All right, let's talk Mission Produce, ticker AVO. They just dropped a Q3 earnings report that was an absolute monster, and it sent the stock flying. So today we are going to break it all down. What drove this incredible performance, and more importantly, what it means for the next quarter.
So here's the game plan. We'll start with the big flashy numbers. Then we'll peel back the layers to see how they pulled it off. We'll get into management's head, look at the storm clouds they see gathering for Q4, and then we'll wrap it all up with our official take on the stock.
Okay, first up, let's just look at the Q3 snapshot. And let me tell you, Mission Produce didn't just squeak by the estimates. They delivered a powerhouse quarter that made Wall Street sit up and pay attention.
Now, management was out there calling this a record quarter. And you know what? It wasn't just talk. The numbers absolutely back it up. We're talking record revenue, record gross profit, a really impressive showing.
Here it is, the headline number everyone was looking at. Adjusted earnings per share came in at 26 cents. The street was only expecting 15. That's not a beat, that's a blowout.
And listen, this wasn't some flimsy bottom line only beat. The whole picture was strong. Revenue didn't just meet expectations, it crushed them, jumping 10% year over year. But the real story, the number that gets me excited, is that gross profit line, up a whopping 22%. That tells you they're not just selling more stuff, they are making more money on everything they sell. That's efficiency.
So, did Wall Street like what it saw? Oh yeah. The stock popped almost 7% the very next day. I mean, that's a pretty clear vote of confidence from investors. They were definitely impressed.
So, the big question is, how? In a market that can be pretty tough, how did they pull off a quarter like this? Well, it really boils down to two big things: sheer volume and a really smart business model.
Here's the secret sauce. It's this classic tug-of-war, right? They sold 10% more avocados this year. And yeah, the price they got for each one was down about 5%. But the huge increase in volume more than made up for that dip in price. They had a ton of product coming out of Peru and a much smoother supply from Mexico this year, which really fueled that volume surge.
And if you want to see their strategy in action, look no further than their international farming business. This segment was the absolute star of the show. Sales shot up 79%. And get this, adjusted EBITDA soared by 163%. That is the power of owning your own farms, especially when your Peruvian crop has a massive comeback here.
And this right here, this is what analysts call operational leverage, and it's beautiful to see. They actually made their business more profitable, expanding gross margins even though their day-to-day operating costs went up. And don't get too spooked by that SG&A number. Management was clear. That jump was mostly them paying out big bonuses because they had such a killer quarter. It's not a permanent increase in their cost structure.
All right, we've seen the numbers. Now, let's get inside the heads of the executives running the show. For them, this quarter wasn't some lucky break. They see it as proof positive that their big global strategy is finally firing on all cylinders.
The CEO, Steve Barnard, basically came out and said, "See, this is what we've been building all along." The core message was all about resilience, that they've built a machine that can churn out strong results no matter how crazy the market gets. And throughout the call, they just kept hammering home these key advantages: their global reach, their new facilities like the one in Guatemala, and they're pushing to other fruits like blueberries and mangoes. Oh, and with all the chatter about tariffs, they basically just shrugged it off. They said the $10 million annual hit is, and I quote, modest. That's a pretty confident stance to take. Okay, so Q3 was a home run. Fantastic. But, and you know there's always a but, the look ahead to Q4 is where things get really interesting and, frankly, a little complicated. It's shaping up to be a battle of two massive opposing forces.
First, let's start with the good news. There are going to be avocados everywhere. The entire industry is expecting supply to be up around 15% compared to last year. We're talking a big crop coming out of Mexico, which is great for availability.
But here's the flip side of that coin. Basic economics, right? When supply goes through the roof, what happens to prices? They fall. And we're not talking about a little dip. Management is guiding for prices to be down 20 to 25%. Ouch, that's a serious headwind. So, that's the whole ball game for Q4, right there. It all comes down to this one question. Can all their operational smarts, their global network, their whole efficient system protect their profits when prices are falling off a cliff? That is the debate for this stock right now. So you've got a fantastic quarter in the rearview mirror, but a really challenging road just ahead. What does it all mean for the stock? Okay, let's put it all together. This is our take. This is really where you, as an investor, have to make a decision. Do you bet on the incredible execution we just saw in Q3, or do you get nervous about those big, scary pricing storm clouds gathering for Q4?
Look, the bull case is easy to see. These guys are great operators, and their business model is a real advantage. The bear case, though, well, it's staring you right in the face with that pricing guidance. So for us, it comes down to this. Yes, the company itself is firing on all cylinders, but that pricing pressure, it's like trying to run into a hurricane. It's just too big of an overhang for us to ignore in the short term.
And for that very reason, we are initiating our coverage with a market perform rating. What does that mean? Basically, we think the risks and the rewards are pretty evenly balanced at the current price. We don't see a compelling reason for the stock to dramatically outperform the rest of the market until we get more clarity on how those Q4 margins hold up.
Now, for those of you who already own the stock and are sitting on some gains, here's a little idea. You might consider selling some covered calls. Think of it like getting paid to wait. You sell someone else the option to buy your shares at a higher price later on, and you collect some cash or premium for it right now. It's a way to generate a little income while this whole volume versus price drama plays out. So that's our complete rundown on Mission Produce. A great quarter, but a tricky setup ahead. And as we always say, please remember, this is not financial advice.